Hi everyone, my name is Zara and welcome to my channel. I wrote CFE in September 2022 for the first time in insurance with no background in insurance, 0 day working in firm, and I passed it. I'm really happy and excited and want to share with you what I did to pass this monster exam. In this video, I want to start talking about the CPA Canada Handbook. It's really important to get more familiar with the different sections of the IFRS, ASPE, and NPO, which are part 1, 2, and 3 of accounting section of the handbook. And I'll go briefly to each part, explain about it, and today's topic is IFRS 15 and ASPE 3400. I highly recommend whenever that you are studying a part in IFRS, study the same topic in ASPE because you will keep your mind organized in this way. You will understand the differences and similarities of IFRS and ASPE at the same time very well. As I said before many times, keeping your mind organized is one of the important keys that you should know and keep your mind very well organized. So let's go. And before starting, the reason that I'm presenting in Word is that I don't want to present it in PowerPoint or in bullet point because I want to show the reality. The bullet point is really nice, but it's not deep, and you won't see what you should see in the CPA Canada Handbook. And you may call it nausea. It's the same thing. And whenever you open it, you will see something like this: CPA Canada Standards and Guidance Collection Exam Reference. We are gonna go through the accounting section only in this series of videos. When you click on accounting section, you will see 3 parts. Part 1, which is International Financial Reporting Standards, and we call it IFRS. Part 2 is Accounting Standards for Private Entities, that we call it ASPE, ASPE. And the third part is Accounting Standards for Non-Profit Organizations. You may call it NPO or NFPO. And I want to clarify something here before going to different sections. The private entities have 2 choices for following different accounting standards. One of them is IFRS and the other one is ASPE in Canada. But the public companies should follow IFRS. I saw that some people not in the CPA school, they got confused that what is ASPE and which companies can follow ASPE. So when you click on the part 1 IFRS standards, you will see here IFRS standards in effect on Jan 1st, 2022. You have to click on this section, and then when you did it, you will see IFRS sections, IAS, IFRIC sections, and SIC sections. And today we are going to go through IFRS 15, revenue from contracts with customers, that simply we call it revenue recognition or RevRec. And the topics that you should know is 90% of IFRS 1 till IAS 41. You should get more familiar with, I would say, 90% of these topics that I'm trying to cover the general rules and most tricky paragraphs of each part. And then when you click on part 2 ASPE section, you will see something like this, that under accounting standards, you will see that there are 2 topics here. General accounting sections 1000 to 1800, and then specific items sections 3000 to 3870. When you click on them, you will see these sections separate from each other. The topics that you should know from sections 1000 to 1800 is not all of this. Mostly it's the business combinations, subsidiaries, consolidated FS, non-controlling interest, and then foreign currency translation. And the other part, specific items, mostly you should know all of them. I would say 80% of them. So, and the last part, which is part 3 of the handbook, is the accounting standards for NPO. That it hasn't been tested deeply, but it's been tested in previous CFE cases. I don't want to spoil that which year or which day it's been tested. We'll go through that part too and see which parts are important in that section. So let's start with IFRS 15, which is mostly focused on control, and ASPE 3400, which is mostly focused on risk and rewards. There are different sections about these two sections of the handbook: general rules, tricky paragraphs, and more. Today I just want to cover the general rules and a bit of the tricky paragraphs that you may not know. And the second paragraph, I want to talk about the tricky paragraphs, that they are mostly in the Appendix B of the IFRS 15. When you open each section of the handbook, you will see a content section that has scope, recognition, measurement, subsequent measurement, disclosure, and many different parts that in front of them you will see a number, which is the number of the paragraph. Under IFRS, not only IFRS 15, generally speaking, under IFRS, when you open each IFRS section, you will see some parts that are highlighted or not highlighted. The highlighted parts are the most important paragraphs, but it doesn't mean that the paragraphs that are not highlighted are not important. They can be important, but mostly the highlighted ones are the most important sections. And under ASPE, you don't see any highlighted or bold sections. The parts that are typed in italic, they are the important parts of each section of ASPE. Let's start. IFRS 15, a 5-step model. You know that it starts with the contract, performance obligations, satisfaction of performance obligation, and transaction price and revenue recognition. You all know this 5-step model, but it is like a warm-up. In day 2 or even day 3, but mostly day 2, you are not going to be tested like this. There is, or it's better to say there are, one or more mini AOs. You will see a big general RevRec AO, and in that AO you will see many AOs. That is the main reason that candidates cannot get C in a financial reporting section. So those are the tricky paragraphs that we'll go through them a bit today and in the next video that will cover Appendix B of IFRS 15. So I really appreciate if you like this video, subscribe to the channel and hit the notification, and don't miss the future videos. So let's go. In the recognition, you will see identifying a contract in paragraph 9. There are 5 sections that you would say, okay, there is a contract or no. In day 2, when you want to analyze if there is a contract, you should refer to all these 5 sections in order to make sure that you have a deep analysis and get C. You need competent mark. The first part is talking about the parties approve the contract. The second one is the parties right regarding the goods or services, and then there is a payment terms, and the other one is commercial substance, like the risk, timing, or amount of the entity's future cash flow, and the other one is it is probable that the entity will collect the consideration. The next part is that in paragraph 17 is talking about combination of the contracts, that if one or more of the following criteria are met, you would say that okay, you can combine the new contract with the old contract, that single commercial objective, or the consideration to be paid in one contract depends on the price or performance of the other contract, or the goods or services promised in contract are single performance obligation. There are other parts that in the contract section that starts from paragraph 9 are important for you, like the modification of the contract, that you can refer to those parts and see in what cases you can modify a contract. But these parts, the combination of the contracts or modification of the contracts, has not been tested in CFE before, but just in case, if you want to get more familiar with the topic, it's a good idea to know them and get more familiar with these ones. The second part is identifying performance obligations here, that the definition of distinct is really important in this step, that it's been clarified in paragraph 29. There are some keywords here that I want to highlight them. One of them is integrating the goods or services with other goods or services. The other one is modifies or customize. The other one is if the goods or services are highly interdependent or highly interrelated. Mainly, when we talk about a distinct good or service, we mean that they are separate from each other. Here it is, separately identifiable. But it means that they are not integrated. They are not modifying each other. They are not dependent or related to each other. And when it's been met, you would say that okay, the good or service is distinct or not. This part is really important to analyze it properly because it will impact on the other steps of 5-step model. When you did that, you will go through the satisfaction of performance obligation, which starts from paragraph 31. And in this part, you will see that an asset is transferred when the customer obtains the control of that asset. This word is very important. Do remember that I talked about IFRS 15 is mostly focused on control, and ASPE 3400 is mostly focused on the risk and rewards. This paragraph is very important, and as you see, it's been highlighted and it's been bold in the handbook. And whenever that you want to refer to the control, if the customer obtained the control of the asset, you can refer to this paragraph. And below I will show you that what do we mean by control exactly. The satisfaction of performance obligation can be at one point in time or it can be over time. So here's the definition of over time: when one of the following criteria is met. The first one is the customer at the same time is receiving and consuming the benefits. The second one is the entity's performance creates or enhances an asset, like work in progress, WIP, we call it WIP, and the customer controls as the asset is created or enhanced, like a manufacturing company. Or the entity's performance does not create an asset with an alternative use. It's very important. Like a company is making for a customer a very specific and customized boat for a customer. And if the customer says, I don't want this, the entity cannot sell it to another customer. There is no alternative use for the entity. Does not create an asset with an alternative use. If one of these items are met, then you will say that, okay, the performance obligations satisfied over time. But there is a very big and long paragraph 38, that is talking about at a point in time satisfaction of performance obligations. You don't need to copy and paste all these parts, but you should know that in paragraph 38 you will see the criteria for at a point in time and what are the key words in each paragraph that I will show you. In part A, you will see that the entity has a present right to the payment for the asset. The other one, the customer has a legal title to the asset. And then the entity has transferred the physical position of the asset. And the other one, the customer has the significant risks and rewards of the ownership of the asset. And the last part is the customer has accepted the asset. You can take a note that in paragraph 38, the present right, the legal title of the asset, the physical position of the asset, significant risk and reward, and the acceptance of the asset by customer are really important in this paragraph when you want to recognize and analyze the performance obligation satisfied at a point in time. There is a very important part that is hidden here that I want to talk about it, and here it is. Party to contract has the ability to direct the use of and obtain substantially all of the remaining benefits from an asset or restrict access of the other entities to those benefits. It's not written exactly that this is the definition of the control under IFRS, but this is really close to the definition of control under IFRS. If you want to make a separate note for yourself, remember this part as the control meaning. And then you will see measurement in paragraph 46 that whenever the performance obligation is satisfied, the entity shall recognize as revenue the amount of the transaction price. There are some topics here which excludes the estimates of the variable consideration that we'll go through them in the next video. And here you will see that determining the transaction price. An entity shall consider the terms of the contract and its customary business practices to determine the transaction price. Briefly, it should exclude some parts. The amounts collected on behalf of the third party, like some sales taxes. Maybe in your RevRec AO, you see a part that says, okay, the sales tax that's been already paid, it's included in the amount of the transaction. And you should know that whatever that's been collected on behalf of a third party, like the some sales taxes, should be excluded from the transaction price. And then the consideration promised in the contract with the customer may include a fixed amount, variable, or both. This part is not that much tricky, which is talking about the transaction price, but just in case, you should know that what amounts can be included in this transaction price. The other part that is important, I found it important for myself when I was getting ready for CFE, was paragraph 48. That was talking about the variable consideration, the constraining estimates of variable consideration, existence of significant financing component in the contract, non-cash consideration, consideration payable to a customer. I don't want to go through all these topics at the same time, but one of them that I found it really interesting and important was the non-cash consideration that you will see from paragraph 66 to 69, and here it is. Well, before talking about non-cash consideration under IFRS 15, I want to say that you will see this topic in my videos in two other sections in IFRS and ASPE, which is a bit confusing, but I found them really helpful. And if you just know the number of paragraphs, you will kill it if just in case you see a sub AO or mini AO of non-cash consideration in your exam. One of them is under PP&E section, and the other one is non-monetary transaction. That I'll explain them in those parts. But what do we mean by non-cash consideration? Basically, we mean that something that has been done, but the customer says, I don't want to pay money for that. We call it non-cash consideration. So in this case, to determine the transaction price for contracts in which a customer promises consideration in a form other than cash, an entity shall measure non-cash consideration at fair value. Easily copy and paste this paragraph and tie to the case fact in your analysis and get the mark for it. Boom. And then there is a part that starts from paragraph 73, allocating the transaction price to performance obligations. That starts from paragraph 73, and it's mostly talking about the allocating based on the standalone selling price. That you have definitely seen a couple of examples in previous cases that you have done, and simply it's talking about the proper allocation of the transaction price, and that should be done based on the standalone selling price. For example, you have 5 different products in the company that they are distinct from each other, and you have to allocate the transaction price to each performance obligation or distinct good or service separately from each other based on the standalone selling price. In the next video, I will go through Appendix B of IFRS 15, which is talking about the tricky paragraphs. So let's see the same general rules in ASPE 3400. ASPE is really simple in this part, and it contains these 3 sections: the performance achieved, reliably measured amount, and collection is reasonably assured. And in the recognition part, you will see that some paragraphs are italic and some are not, like this part. The parts that are italic are the more important paragraphs. So here you should know these paragraphs when you want to analyze the ASPE 3400. And here is the first part, performance achieved, and then you talk about the performance achieved. You will see paragraph 5 that the seller of the goods has transferred to the buyer the significant risk and rewards. As I said before, ASPE 3400 is mostly focused on significant risks and rewards. And the other part is reasonably assurance existence regarding the measurement of the consideration that will be derived from the sale of goods. Again, it's talking about the measurement of the amount, or if we want to say it in IFRS language, the transaction price. And in ASPE, you will recognize the contracts or the revenue using either the percentage of completion method or the completed contract method. And this means that the revenue to the work accomplished. I will show you in which paragraph it's been discussed. And the other parts are the performance achieved when all of the following criteria have been met. For example, persuasive evidence of an arrangement exists, the delivery has occurred, and the seller's price to the buyer is fixed or determinable. There are some other parts like the consignment arrangement, right to return, repurchase of the product that we'll discuss in the next video, and some other parts like the bill and hold arrangement again, and non-refundable licensing, and these kind of things that we'll discuss in the next videos. And there are some other topics like cancelable sales arrangement, right of return, refundable fee, and for the service arrangements that we can go through them in the next videos. But there is one important paragraph that is really important, and I found it really helpful for myself. That is paragraph 17. Is talking about the percentage of completion method, that it's going to be used when performance consists of execution of more than one act. It's very important. And revenue would be recognized proportionately by reference to the performance of each act. Revenue recognized under this method would be determined on a rational and consistent basis, such as on a basis of sales value, associated cost, extent of progress, or number of acts. And then the amount of work accomplished would be assessed by reference to measures of performance that are reasonably determinable and relates as directly as possible. There is one other point here that is very, very important, and it's this part. The amounts billed are not an appropriate basis of measurement. You will see in your case practicing that why this simple sentence is very, very important. And then the other paragraph that is important in this part is about the completed contract method, that when you use completed contract method under ASPE 3400, only be appropriate when performance consists of the execution of a single act, or when the enterprise cannot reasonably estimate the extent of progress toward completion. As I said before, in the next videos, I'll go through the 3 key paragraphs of revenue recognition, IFRS 15 and ASPE 3400. If you found this video helpful, informative, or gave you an idea how to use the handbook, I really appreciate if you like this video. Appreciate if you subscribe to the channel if you haven't done already. Hit the notification and don't miss the future videos. Again, thanks for watching and see you soon.